Okay, good evening, everyone. Hopefully everyone can hear me okay, and you've got a copy of the slides that we're going to be running through. If anyone can't see the slides or can't hear me, having any other difficulty, we've got the chat box and the Q&A running. So just pop a note there, we'll see it. Likewise, any questions you have as we go through this evening, please do feel free to pop them in the chat box. We'll be monitoring that throughout the session. Anything desperately urgent that we need to run through at the time, I'll make sure we touch on. Otherwise, we'll try and keep a few of the questions to the end, just so that we know that we have plenty of time to get through all the material. We've allocated an hour, mindful of all of your time, giving up your Wednesday afternoon, Wednesday evening, to spend it with me and talk about all things tax. So I promise we'll keep it within that hour and allow some time for questions at the end. But thank you very much for joining. Obviously quite an interesting topic, one that is probably front of mind for a lot of people at the moment, these proposed changes to the tax rules. I'll give you a bit of an overview of what we're going to run through in the session today. By way of introduction, for those that don't know me on the call, my name is Jarrad Brown. I'm an Australian expat financial planner based here in Singapore, and we work with Australians all over the globe, including back in Australia. So obviously when we saw these tax residency proposed changes, we've obviously been monitoring the situation very closely and having conversations with various members of parliament, with our clients and with other colleagues in the industry. But let's dive right in. As I said, any questions, pop them in the chat box. We'll keep this relatively interactive. Now, before we get into the material, I do just need to mention everything you hear throughout this session, and we are recording this, so it will be up on YouTube, so you can share it, rewatch it if you need to. But everything we go through is general information and is not personal advice, and we are not accountants. So anytime you want personal advice or you want somebody to review your own situation, make sure you seek professional advice. And of course, investments go up and down. These rules can and will no doubt change from what we go through on this call or throughout this webinar today. So make sure you always do your homework and reach out and seek professional advice. So enough of the legal talk, let's get into it. So a bit about what I'm going to run through and what we're going to cover throughout this webinar today. First, very briefly, I'm sure you don't want to hear about me, but I'm just going to give you a bit of an outline of exactly who we are, what we do, and then we're going to get into the material. So from there, I'm going to give you a bit of an overview of what the current Australian tax residency framework looks like, so that at least we have a clear idea of what the starting point is. Then we're going to go through what has been proposed. It is still just at proposal stage, what that could mean for you if you're in Singapore, if you're in Hong Kong. We have people from all over the world joining us today, so we'll go through a few different case studies, a few examples as well. What it could mean, what's going to happen next. So from where we are now, what's actually happened so far, and what do the next steps look like? What do we think is going to happen? As I said, we'll touch on some case studies. So hopefully that will cover everything for you. Now, so just to cover, can I just clarify, can everyone see the slides? I've just had a note here that one can't. If somebody could just pop in the chat box if they're showing or not, that would be very helpful. Excellent. Thanks, guys. Appreciate the rapid response there. Following this webinar, so just to clarify that question, I will be sharing a copy of this online post the webinar. There isn't a copy that you've got access to separately. So just to touch on that, sorry for the little break there. And then I'm going to give you just coming back to our agenda, to wrap up what, as an Australian expat, you should be thinking about. So if you're in Singapore, you're in Hong Kong, you're considering leaving Australia, going back to Australia, whatever your situation may be, what should you think about? How do you avoid falling afoul of these potential rule changes? So let's get into it. As I said, very briefly about myself, I work, as I said, with Australians all over the world. Been here in Singapore for a little over 8 years now, and working within Australian Expat Group, which is the division I run of global financial consultants, which originally started in Sydney back in the late 90s before moving to Singapore in the early 2000s. So We're now one of the longest standing advisory firms in Asia that isn't owned by a bank or an insurance company, which for anyone who has been following the Royal Commission in Australia will know is a fairly valuable thing in this day and age. We are licensed here in Singapore, as I said. We work with Australians all over the world. I think we're now at about 27 different countries. So we don't cover them all, but we certainly have a pretty good idea of the different tax frameworks, legal frameworks in various countries. And as I said, this is what we do day in, day out. Australian expat advice is not something we dabble in. This is our area of expertise. So we'll keep that brief and let's get into the tax changes. Now, what do the current rules look like? Now, some on the call may be well across this already, but we know there's a lot of misinformation out there. So I want to be very clear on what the rules look like, because that gives us a very good idea or potential rationale of why the government has proposed a change at all. So there are currently 4 tests. Now, one of the key issues with the current tests is there isn't necessarily a dominant test or a starting point, but all 4 tests kind of apply simultaneously. And they are exactly these here. So firstly, we have the resides test, which very simply, where do you live? Where is your long-term residence? Where are your clothes? Where is your car? Where are your assets? Where do you live and work? So that's a relatively simple one in terms of where we live. The next test is what they call the domicile test. Now, this comes down to your permanent place of abode. The simplest way to think of this is, where are your memberships? Where is your health insurance? Where is your car? Where are your clothes? If you're an Australian expat like myself living in Singapore, and you wish to solely be a Singapore tax resident, which most of us do, then what we need to think about is, would a Singaporean have a membership to the local bowls club or to a Rotary club, or be going to Australia to claim Medicare? The answer is no. So that's really what the domicile test is there to examine. Where does your life look like it predominantly exists? So again, a little more complicated than the resides test, but once you actually delve into it, also relatively straightforward. The super test or Commonwealth superannuation test, a very straightforward one. If you are sent overseas on an Australian government posting, still an active member of an Australian government superannuation fund, 9 times out of 10, actually almost 10 times out of 10, you will be treated as an Australian tax resident. And that's typically built into your contract, factored into your salary for most, not necessarily all, but 9 times out of 10, or most of the time, as I said, you'll be treated as an Aussie tax resident and pay Australian tax on your overseas income. The final one, which we all know, and a lot of people like to refer to as being almost the only test, is the 183-day test. Did you or did you not spend more than 183 days in Australia? If you did, you're an Australian tax resident. If you didn't, see the other 3 tests. So it's not as simple as you only spend 181 days in the country, therefore you're not an Aussie tax resident, because if you fail other tests, then the ATO could obviously argue the fact that you are an Australian tax resident. So that's the current rules. Hopefully it all makes a little bit of sense, but given that they all kind of apply at the same time, as you can see, it can be quite difficult to work out where you should start, where you might fall afoul of these rules. Now, what do the proposed changes look like? So just to set the scene and give you a bit of context, this was a proposal that was actually drafted and released back in 2019. The government got around to reading it last year, and here we are today, not even at debate stage yet, but just at the proposed change stage. Now, the Australian government has argued this is to simplify the tax rules. I certainly question that. I think it's to catch expats off guard, potentially, but let's get into what's actually being proposed. So one of the things they've set out to do is to make it very clear which test applies when. So it has a little bit more of a logical flow. The first one is what they've called the bright line test, which, as we already have in place at the moment, the 183-day rule. Did you or did you not spend 183 days in Australia? That is the first test. If you didn't, then you proceed to the next test. If you did spend 183 days or more, you are an Australian tax resident, you will pay Australian tax on your income, on your worldwide income, subject to any double tax agreements, depending on the rules of those assets. Now, if you proceed to the next tests, that's when we have what they call the secondary tests. The biggest one here is the 45-day rule. Now, there's a few other caveats to bear in mind here. So just hold questions, because there's a few other things to be aware of, because this is where we're seeing a lot of people get into a bit of a panic around this 45-day rule. But there's a few other things to bear in mind here. So the way the rule works is this: if you spent 45 days or more in any year in Australia, then you need to proceed to the factor test. And the factor test is going to catch most Australian citizens or permanent residents out, because basically it states that if you fail 2 or more of the factors, you will be deemed to be an Australian tax resident. And the factors are this: do you have the right to permanently reside in Australia, i.e. are you a citizen or permanent resident? For most of us, tick, we have an Aussie passport. The second one is, do we have Australian accommodation? Now, this one needs a bit of fleshing out, because is that an investment property that someone's living in? Is that an investment property that's untenanted, because technically we could move into that property? Or is it a property that we're holding that we have no desire to rent out and never has been rented out, but we don't keep our belongings there? Again, very likely that a lot of people will fail that one. The next factor is, do you have family in Australia? Now, this is typically financial dependents, so spouse or dependent children. Now, the obvious question there is, well, if we have school-age children who are still technically dependents in boarding school, which is obviously the case for a lot of Australian expats, are we caught by that factor as well? Again, something that needs to be fleshed out by the Australian government. And the final one is, do we have significant economic ties to Australia? Which they've loosely worded as, do we have an investment property? Do we have large amounts of cash? Do we have share portfolios in Australia? What is significant? The way we're sort of assuming the rules to read is, do we have the majority of our wealth in Australia at the moment? And that's really what that question is coming down to. Now, 2 other things to bear in mind here, and actually before we get to the commencing and ceasing residency, the one very important thing to bear in mind with the factor test and the 45-day test is that the double tax agreements will supersede that factor test. So if you're in a country like Singapore, which many of our attendees, many of our clients on the call this evening are, then the double tax agreement between Australia and Singapore will supersede that 45-day test. Under the double tax agreement, we have to have our permanent home in Singapore, meaning a long-term lease. We largely can't fail the significant economic ties to Australia test, but the permanent place of abode will typically supersede that. And then our life needs to be outside of Australia. So for most of us, this 45-day rule under the proposed changes won't have a huge impact, as long as we're in a country with a double tax agreement. Now, if you're in Hong Kong or most of the UAE or many other countries that don't have a double tax agreement, unfortunately, that 45-day rule is going to become a significant problem. Now, there are 2 other things to bear in mind. One is the commencing residency test. So this is basically, when would you be determined to be, when would you be deemed to become an Australian tax resident? Now, this is a relatively simple one, and often not one that many people typically worry about, because for the most part, we're not coming from a higher tax jurisdiction than Australia. So most of us would actually rather push this one off as long as we possibly can. But for the most part, as soon as we basically set foot in Australia, we've been in the country for 45 days or more and plan to stay, we are deemed to be Australian tax residents. Now, that's quite important if you've got CPF, you've got offshore assets, offshore pensions that you're looking to repatriate to Australia. You need to have a bit of a plan in place, because otherwise the ATO can tax you on deemed gains, realised gains, when you actually bring that money back into Australia. And even if you don't bring it into the country, the ATO could tax you on the gains at your marginal rate of tax. Now, the other area where this can become problematic is for those that are actually looking to leave Australia. When are we deemed to be a non-resident? When do we actually escape the grasp of the Australian Tax Office. And unfortunately, it's not as soon as we leave, because we have to meet a series of criteria to actually be deemed to be non-residents as well. And the way these rules work are, again, relatively simple. If we've been in Australia, if we've resided in Australia for 3 years or more, and we're leaving Australia, we must have an employment contract that is 2 years or more. We must also have long-term accommodation, which for most of us, as we know, Singapore works in 2-year cycles, typically 2-year employment pass, dependent pass, S passes, 2-year leases. So if you have a 2-year lease, that is deemed to be long-term accommodation. If you have a 1-year employment contract and a 1-year lease, that is not long-term accommodation. That is not long-term employment, even though it may be extended beyond that 12 months. So for that 12 months, you would very likely be deemed to be an Australian tax resident and need to pay Aussie tax on your overseas income. So certainly an area to seek advice, certainly an area to clarify, save for, prepare for. And if you are looking to leave Australia and you are going to fall into some issues here with ceasing residency, then again, you're going to want to factor that into your decision around whether you leave Australia or not, because that could change, obviously, the way that offshore posting actually looks. Now, obviously, if you don't initially meet the rules, but eventually do, then once you do, you can obviously apply to be a non-resident or file your first tax return in Australia as a non-resident, and then your income will be treated as offshore, as exempt or subject to the double tax agreement. Now, hopefully that all makes sense. Now, we've just got a question here, which I'll just touch on here. New Zealand citizen, it may be on the minds of a few people joining us today, has the right to reside in Australia, which is an excellent point. So technically you would fail one of those factor tests. If you then have family that reside in Australia, or you have significant economic ties, or you have accommodation in Australia, then technically speaking, you would also fail 2 or more of those factors. So then you've got to consider, is there a double tax agreement in place between your country of residence and Australia, or is there not? And therefore, does that 45-day test and do the factor tests actually apply for you or not? So hopefully that covers that one, but certainly an excellent point with the New Zealand citizenship. Now, I've put together a bit of a flow chart here. Apologies, some of the white font is a little difficult to read on the sort of gold backgrounds, but essentially it just outlines the step-by-step process exactly based on what we've just been through as you step through to work out whether you're an Australian tax resident or not. And it's exactly that. Is there a double tax agreement between your country of residence and Australia? If there is, it's largely down to the 183 days. Now, one of the other issues and one of the other areas that the Australian government has highlighted as a potential reason for introducing these changes is because there is no hard and fast number around how long we're allowed to spend in Australia if there's a double tax agreement in place. We know it has to be less than 183 days, but is it 182? Is it 50? Is it 90? Some are suggesting that it's about 60 before it becomes problematic, but there really isn't a crystal clear answer. And under the proposed changes, there won't be a crystal clear answer. So again, this is why we need to actually think this through a little further and start to think about where our wealth is, where our insurances are, where are we genuinely living? Where are we building our life? Where are we saving? Where is our family? So that's why we need to think through all the things around personal finance to make sure we can actually support the fact that we are genuinely living abroad. And if that's in Singapore, that means local memberships, whether it's ANZA or AusCham, local health insurances, local life insurance, savings in Singapore, where are your bank accounts, et cetera, et cetera. Now, I won't go through this line by line. As I said, you will get a copy of this, so you'll be more than welcome to read through it at your leisure. And hopefully I just include this to hopefully clarify exactly how that sort of step-by-step process works. So what happens next? Where are we? What has actually happened since this was announced? So we're a few months after the fact now, since these rules were actually proposed. Not a great deal has happened. There has been a petition released so far, which received about 5,700 signatures, which was great. I'll walk you through exactly what was proposed in that petition. and also what I think will happen as a result, not necessarily of the petition, but of discussions so far. But we are at very early stages. So what needs to happen next is we need to have an explanatory memorandum, an EM released, the proposed legislation around exactly what this could look like, and that will give us the government's rationale for why they're looking to introduce these changes at all. Now, in our opinion, and this is just our opinion, the view is going to be we're looking to simplify things for Australian expats to make it much easier to clarify if you're liable to pay Australian tax or not. Now, we think that's absolute nonsense, but that is the expected reason that we're going to hear. Now, once draft legislation is released, there will be some level of debate, hopefully. We will certainly be writing letters to the various ministers, lobbying as much as possible with the right people, hopefully to actually share some insights around what expat life looks like. And I think one of the very important things that really hasn't been considered and wasn't considered when these proposed changes were actually drafted back in 2019 is COVID has hit. And that's meant that we're living far more global lives. Families are split apart, people are working remotely, kids are in boarding school, we're relying on Zoom as we are throughout this session. Right now, we're relying on technology a lot more. And expat life is different to what it was 2 years ago, and certainly different to what it was when these tax laws were originally passed. And that's what we want to see actually factored in. This 45 days is absolute nonsense. And we expect that some of the rationale for the 45 days will be, well, you're given 4 weeks leave, 45 days is a lot more than 4 weeks, so what are you complaining about? The issue with that, of course, is, well, what if we have sick family? What if we need to go back for work? What if we need to go back to look after business, other investments, visit friends, whatever it may be? Now, of course, we can apply to carve out those days with the ATO, but what a compliance nightmare. So we're certainly very hopeful, not necessarily optimistic, but certainly hopeful that there will be at least some consultation with the people working in this space. Once the consultation's happened, debate has happened, it will be, obviously, it will receive royal assent, and that will be it. Now, we've just had a question around exactly what the double tax treaty looks like. Yes, certainly, let me come to that in just a moment, exactly what those rules look like. Now, the next question with all of this, of course, is, well, when are these rules likely to come into effect? And could they come into effect retrospectively? Now, in answer to the latter, it is highly unlikely they would come into effect retrospectively, because even from an administrative viewpoint, it would be a pain in the backside. Now, all going well, I guess from the government's viewpoint and everything being sort of flowing through relatively seamlessly, we would expect that this might be in place from 1 July of next year. So 1 July 2022, potentially 1 July 2023. We wouldn't expect it to be any earlier and wouldn't expect it to be any later than 2023. If at all, we'd expect there to be some significant change or for the whole thing to be scrapped. Again, while we'd love to think that was true, I think it's very, very unlikely. Now, just touching on the question around the double tax agreement between Singapore and Australia, there are 3 key areas. One is your permanent home. So where is your long-term lease? Where is your job? Where do you live? And so back to those previous tests I mentioned, is your employment contract for 2 years or more? Is your lease for 2 years or more? If that's the case, we can tick the first box. The second test is the permanent place of abode. Again, considering, would a Singaporean claim on Medicare? Would they have Australian active health insurance? Would they belong to the local Mount Lawley or Perth Rotary Club? The answer is no. Would they have memberships in Singapore? Yes, they would. So that's what the permanent place of abode comes down to. The final one, which is far less important, is the significant economic ties test. So if you're failing the first 2, they're then going to look at, well, where are your investments? Where is your wealth? Do you actually have any wealth in Singapore? Again, coming back to those first 2 tests. So hopefully that gives a bit of clarity. Now there's a couple of other questions which I'll hold to the end. Hopefully that's okay. And we'll get to. Now, I mentioned what's actually happened. So we've had a petition that closed last week. So just very, very recently, as I said, just shy of 6,000 signatures, which was great. received a lot of support. Now, obviously, there's a lot of Australian expats, so it wasn't a large portion of them, but certainly, or at least hopefully, sheds a little bit of light on feelings, a little bit of light on what Australian expat life actually looks like. Now, the petition raised three things. One was to extend the 45 days to 90, which would be a wonderful thing. It gives us 3 months to spend back in Australia without really any worry of becoming an Australian tax resident. The second one was to have carve-outs. So if you have ill family members that you need to visit, or you have business that you need to attend to in Australia, or your employer sending you to Australia because you need to look after operations, meet clients, attend board meetings, whatever it may be, that was also raised as a carve-out. Now, part of that is already possible, but again, it is an administrative nightmare to do that year in, year out. Can you count on it? Is it reliable? It becomes quite problematic. The other one they also raised is to have a weighted average score test. So on all of those 4 factors that have been raised for that 45-day test, let's make it a weighted average. So instead of, do you have the right to live in Australia? Do you have economic ties? Do you have family? We actually get a weighted score across those different variables based on our own situation. So we feel some good suggestions there. Again, hopefully shedding a bit of light on Aussie expat life for the government. We will see. As I said, there is no M released just yet. Once there is, then we'll actually have something to argue with and pull apart. And obviously we're now also in a position where we have the travel exemptions, which I'm sure most on the call would have seen. We've certainly been rather vocal on the topic. Anyone looking to leave Australia now needs to apply. Our minister, Karen, came out and said basically all Australians that ordinarily live overseas will automatically or largely be approved without too much hassle. I believe it was actually less than 24 hours after there was an article released to say that 4 had already been rejected. Most people that we're speaking to are getting approved. Some are having to sign statutory declarations to say that they won't re-enter Australia for at least 3 months, and essentially stipulating that they won't be a burden on the Australian government. This feels very harsh. Don't know that it necessarily passes the mateship test, but again, obviously public health being what it is, the Australian government has decided that that is what was required. Now, we could argue that was due to poor planning around vaccines and quarantine facilities and all the rest, and that is probably true. But I think if we get into that, we'll never get onto the actual tax topics that we're here to discuss. Those are the current rules. And as I said, we'll be keeping everyone updated. Now, what do we think is going to happen? We personally, I say me personally and our team, believe the rules will be passed largely as they have been proposed. Aussie expats are far too easy a target. Most of us are off the electoral roll, and the Australian government, to be quite frank, really doesn't care. 45 days, 90 days, it is what it is. If you don't like it, pay tax in Australia. That seems to be the current feel. There's a huge lack of consultation with the experts in this field. We're certainly trying to do our part and actually spread the word, share the voice of Australian expats with the people that actually need to be told. But the question really is how much listening is actually going on. And from what we're seeing at the moment, it's not a great deal. We certainly hope it will change. But at the moment, as I said, we're not terribly optimistic. But obviously, we will be keeping everyone updated as this progresses through the various stages. Now, a little bit around some case studies for you. Obviously, this is all just based on the proposed changes. So we don't know exactly what this will look like yet, but based on what has been proposed, I've just outlined 5 simple examples for you. The first in Singapore and the second outside. So in the first scenario, we've got an Aussie resident who's been offered and assigned an overseas contract. It's only for 12 months in Singapore. They've got accommodation arranged in a serviced apartment, because why would you go and take a 1-year lease? It's the hassle of moving. Why not just move into something that's already organised? In that scenario, they haven't met the ceasing residency requirements. They will pay tax in Australia. Very simple, just haven't met the 2-year test. Now, the second is, we've got an Australian expat who's living in Singapore already. been here for 3 years, planning to be here for another 2. So we're certainly past the 2-year rule, travels back and forth to Australia on a regular basis to see family for 120 days a year. Now they have a property in Australia, it's tenanted, it's an investment, they don't go back and stay in the property. In this case, we're starting to get into the grey area. So as I said, some accountants suggest 60 to 90 days is all we're allowed to actually spend in Australia. So if we're up around that 120-day rule, they may look to apply the factor test under the proposed changes. Now, the final one we've got here is the Aussie expat living and working in Singapore, been here for 3 years, planning to stay here for another 2. Again, going back and seeing family on a regular basis. Now, the difference here is they have a property in Australia. So a very common Airbnb strategy. We don't see it too much these days, but certainly was a popular one over the last few years. And when they go back to Australia, a lovely property on the beach, maybe in Margaret River somewhere, and they'll go back and stay in that property. And of course, keep the surfboard there, keep the clothes there, because why not? It makes life a lot easier. In that scenario, they're likely to be treated as a Singapore tax resident. Now, just to cover off the final case studies, and then I'll come to some of your questions. The next one we've got here is an Aussie expat in Hong Kong. Now, unfortunately, there are a lot of Australians that will be hit quite hard with these rule changes. Last check, there's about 80 to 90,000 Aussies in Hong Kong. That may, of course, change as the world reopens, but certainly more than there are in Singapore. Hong Kong doesn't have a double tax agreement in Australia, with Australia, in terms of double taxation of income. Now, in this case, they've been in Hong Kong for 10 years, planning to be there for ever more, long-term lease in Hong Kong, but they travel back to Australia for more than 45 days. So unfortunately, in that case, under the proposed rule change, the factor tests are going to apply. And if they fail 2 or more of those factor tests, it's going to be Australian tax at their marginal rate on their worldwide income, capital gains tax on their shares, maybe even their MPF, also in Hong Kong. Now, in the other case, again, just looking at Hong Kong, I've used Hong Kong here simply because it's a country with no double tax agreement. Same thing would apply in the UAE and many other countries that also don't have the DTA. In this case, same person, lived there for 10 years, planning to stay there forevermore, long-term lease in Hong Kong, but travels to Australia for less than 45 days. In this case, factor test doesn't apply because they didn't breach that 45-day rule. So this is the, in my opinion, quite brutal proposed changes. Thankfully for those of us in Singapore, we will be largely unscathed, but for those in Hong Kong and elsewhere, it could become quite a significant problem. Now, just to touch on a few questions before we get into what you need to think about around setting up your life offshore and making sure that you're at least stacking the odds in your favour to not fall afoul of these rules. Now, the first question is essentially, would the Australian government change just counting business days and ignoring weekends or leave? In my opinion, not a chance. 1 day in Australia is 1 day in Australia. They couldn't care less whether it's a weekend or not. And in their view, if you're enjoying the sunshine and the beach and Australian life, then you should pay for it. And yeah, it is brutal, but as I said, Australian expats were an easy target to go after. And particularly given that a lot of us are not on the electoral roll. Okay, now the next question is the 3 tests that I mentioned as part of the double tax agreement. Do they all need to be met or just one of them? Now, the first 2 are the most important. So permanent place of abode, where is your life, where are your insurances, where are your memberships, where is your family, and where is your long-term accommodation and your long-term employment? You should be able to meet those 2, and then the third one really is not an issue. If you fail either of the first 2, that's when the third one becomes quite an important consideration, and that's around your significant economic ties. Where is your money? Where are your bank accounts? Where are your investments? Where are your retirement savings? Where are your insurances? Where does it look like you live? Where are you accumulating wealth? So hopefully that covers that one. The first 2 are critically important because if you fail either, under the double tax agreement, for most double tax agreements between two countries, particularly with Australia, it simply states that we can't be a tax resident of two countries at once. So we need to meet the rules in one and not meet the rules in the other. Now, the next question is, do my case studies take into account the double tax agreements? Yes, they do. So that is factoring in the double tax agreements and factoring in the proposed changes. So hopefully that covers the questions we've got there. As I said, feel free to fire through with more. These are all just proposed changes, but as I said, based on what we're seeing at the moment, we don't expect to see a great deal of change, but we are quietly optimistic that there will be some more consultation. So if you are worried about these changes, if you're thinking you might fall afoul of them, if you're thinking that you might be looking to move to a country that doesn't have a double tax agreement, what do you need to think about? And likewise, if you're also thinking about how you structure your assets, if you're moving back to Australia, if you're looking to spend a bit of time back in Australia before you go elsewhere, a lot of this will be quite relevant. Now, I've just included this tiebreaker test here: permanent home, habitual abode, and economic and personal interests, as we've already covered. So that one fairly clearly outlines exactly what you need to think about. Now, then it comes down to, what do we actually need to think about? How do we strengthen our ties to Singapore or to another country that is not Australia? Now, there are the 4 tests that I mentioned at the start of the session, and there are the proposed tax residency changes. But if you get hit with an Australian Tax Office residency audit, that will give you about 39 different questions to answer, and they will be focused on a lot more than just those 4 tests. Because if they hit you with one of those audit questionnaires, you've been identified as someone who's potentially breached the rules and identified as an Aussie tax resident, and a large Aussie tax bill may be waiting for you. So what can you think about? What can you consider? The first one is your health insurance. So again, Medicare and private health cover. If you have private health cover in Australia, it can often be a good idea to suspend it, pause it for as long as you can. Now, a lot of them will only let you do that for a period. In some cases, you'll then have to make another payment and then resuspend it. In some cases, they won't let you suspend it at all. So then you've got to consider, well, should you cancel it, or should you just not claim on it, pay for the Aussie health insurance, and also pay for health insurance in Singapore or wherever else you may be based? Now, Medicare, don't claim Medicare. That's a very simple one. Typically, Medicare will give you 5 years to continue claiming once you're out of the country. But again, it's one of those grey areas that's a little bit frustrating when we're looking at tax residency. If you're not paying tax in Australia, you're not contributing to society in Australia, financially speaking, then why are you claiming Medicare? Would a Singaporean citizen, a Singaporean who's grown up here, claim Medicare? Probably not, almost definitely not, you would argue. So consider what you're doing with your health cover. Personal insurance is very similar. Life cover, disability cover, trauma cover. If you have insurances in your super, that can be fine. It doesn't mean you need to get rid of them. Just consider if they're suitable, if they're eligible, if they're covering you while you're abroad, and make sure obviously your overseas address is on file with those insurance policies. Now, the next one is your bank accounts, your investment accounts. Where are they? Make sure your Aussie bank accounts have your overseas address, and make sure your shared registries also have your overseas address, because they should be withholding tax for you. Doesn't mean you need to actually declare or file a tax return, but it does mean they should be withholding 10% of bank interest, 15% of any unfranked dividends for you, and passing that straight on to the ATO. So not as simple as just put your mum or your friend's address on file. Make sure they have your overseas address. Now, club memberships, society memberships, we've kind of already touched on this one. If you're a member of, gosh, sorry to say these days, the West Coast Eagles, or something that might take a long time to get membership to, probably not so much the way the Eagles are playing at the moment. But if it's something that you think will actually take you a long time to get access to again, keep it, no real issue. If it's the local bowls club or your local charity club, you probably don't need to maintain that one while you're a non-resident. Or if you are, certainly have a very good reason in place for why you're doing so. Travel to Australia, we've already touched on this one. Relatively simple. If you need to, if you're not quite sure how many days you spend in the country, you can actually apply for those records also. So for anyone who wants the link, I'll remember to put a link in the show notes for this one, and we'll post that up on YouTube. So if you're wondering how many days you spent over the past few years in Australia, you can pull those records fairly easily. And at least then it will give you a bit of a framework, a bit of an idea of whether or not you need to be worried, whether or not you need to be thinking about what your future residency might look like. Now, obviously, family split across countries. This can, again, become quite a grey area. We're going to need some clarity on exactly what these factor tests look like. Does family consider dependent children who are at boarding school in Australia? Does it not? Does it consider spouses who are in 2 different countries, or does it not? Tax residency is typically an individual test, and that is how it should remain. But is this going to actually change the way those tests apply? So certainly something to watch, certainly something to think about. And particularly if one spouse is working, sending money back to Australia or expatriating funds out of Australia, again, certainly think about that one. The other item that we see a lot is the lease, again, making sure that your accommodation abroad, whether it be in Singapore or elsewhere, is genuinely long-term, meaning 2 years or more. We've seen a number of people who finished their 2-year lease, not quite sure how long they want to stay here, gone on a sort of a loose month-by-month type contract because they think they might want to pack their bags. They might just get sick of Singapore. If you're starting to fall afoul of some of the other residency questions and tests, then the ATO may have an argument or a case to be made that actually you don't have long-term accommodation abroad and you are in fact an Australian resident, and that's why you've gone month to month. Otherwise, why didn't you just sign a long-term contract? So again, just items to think about, items to consider when it comes to supporting your case for being a non-resident. Now, a couple of other questions. Okay, so yes, so one question here. Is it possible to arrange a one-on-one for anyone with any specific questions or anyone looking to return? Yes, absolutely. We will send out a note to everyone with a copy of the recording. So if you have any specific questions that you want to run through your own case that you don't want to share here, here on the webinar today, particularly as we're recording, yeah, more than happy to take that offline and review that situation with you. So thank you for that question. And hopefully that clarifies things. So let's look, broadly speaking, that is where we're at the moment. There is a lot to think about. The proposed changes are fairly draconian, certainly for some. As I said, thankfully living in Singapore, living in a country with a double tax agreement in place, I think we're very lucky, but we do need to be very careful around how these rules could apply, particularly if we look to move to different countries, set up business in different countries, what days we can carve out, what we can't, and what our future plans are going to look like. So as I said, anyone who has any specific questions that you'd like to take offline, more than happy to do so. Happy to arrange a one-on-one. We will be sending out also in the follow-up a very brief sort of survey, to get your feedback on the webinar, your feedback on our presentation, but also just to get a bit more of an insight into your life as an Australian expat, what's bothering you, what you think about these changes, what you might like to see factored into these changes. And that's just going to give us a lot more ammunition when we are drafting letters and speaking to the various powers that be, when we're sort of outlining what should be considered. So guys, if anyone has any other questions, please fire away. Otherwise, we can wrap up a little earlier than expected. I'm just double checking here to make sure that we haven't missed too many questions. Okay, I think we've covered everything. The double tax agreement tests. Yes, we've covered off that one. Yes, the case studies factor in the proposed changes and the double tax agreement. And yes, some commentary around the fact that why would the Australian government care where I'm working if I'm working for an overseas employer? I couldn't agree with you more. Quite often, I'd much rather be working down in Margaret River or Bunker Bay, being a West Australian boy myself, but unfortunately, unless we want to pay tax in Australia and capital gains tax in Australia, it's just not allowed. All right, well, we might wrap up there. As I said, I will send out a follow-up note. If you have any questions, fire them through. More than happy to take them offline, have a chat with you. We don't charge anything for that consultation, by the way, just to be very clear. There's no obligations, so more than happy to have that conversation offline with you. But thank you very much for joining. Really appreciate you giving up your Wednesday afternoon or Wednesday evening. And as I said, we'll be in touch soon. Enjoy the rest of your week and stay safe. Thank you.